Happy Monday, traders. Welcome back and thank you for joining. It's 8:01 a.m. Chicago time on Monday, the 15th of August, 2022. This is episode number 2293. Just 7 episodes from 2300. Again, thanks for being here every time. This broadcast is actually hitting record numbers between the various media outlets. I want to remind you that derivatives trading is not suitable for all investors. Past performance is not necessarily indicative of future results. Now, I'm going to sound a little bit nasal and so on because I'm still fighting off whatever it is I was fighting off last week. No COVID here. So you just have to bear with it. Here's the Convergent Trading pre-market summary sheet. We're looking at a market that is mild risk off across the board. We have somewhere between 50 and 80 basis points loss from Friday's settlement, except when you look at the commodities. I mean, crude oil really pressing up against my key support down here in the 87 area, 87.50. Crude is down 5%, down 5% now, and is hovering near its session lows. Crude, we'll look at in a minute, has just not been able to find those buyers. I mean, it is just, it's getting its face pressed by the seller's foot against the floor right now in this bar brawl. We're seeing gold come off this morning a little bit, silver and copper come off, and much of this is attributed, as of right now, to the numbers out of China. The numbers out of China that came out last night, which were very disappointing. The house price index out of China came in at, let me actually change this for a second, so we can look at the numbers. So China, industrial production came in at 3.8% versus 5%. Retail sales came in at 2.7% versus 5.7% expected. Fixed asset investment came in at 5.7 versus 6.5 expected. The unemployment rate came in at 5.4% versus 5.5. However, 20% of China's youth are unemployed. The numbers were so bad that the PBOC had a surprise rate cut to stimulate borrowing. However, once bitten, twice shy type of thing. You're really not going to stimulate spending and borrowing if the country's not confident in what the government will do with the next COVID outbreak. So this is the big problem for China with the zero tolerance policy. We're likely to see them soften up on that. The other number that was released here, but just about a half hour ago, which is normally inconsequential, but is something that the Fed is going to look at because it comes out of the New York Fed. The New York Empire Manufacturing Index came in at negative 31.3 versus a forecast of plus 8. Again, normally this is not a very significant number, but it is now for the Fed. We saw the S&P bounce up from 4253.50 up to 4261.5 or so, and then since then it has taken that back. The other piece, and this what's impacting crude oil and the energy sector is that Iran is responding to the final EU and U.S. nuclear deal today or tomorrow, and they're expecting there's a pretty or rising bet that they would reach a compromise which would allow Iran to export oil at the market rate, and that's pressure on crude oil. Iran raised its prices to a premium over market rate for certain countries already. And I think this may be read as some confidence that that something might uh, follow through. So that's where we stand. Looking, don't forget, because it's Monday, these numbers changed, the rotation numbers. Also, note that the rotation numbers are now based on 20 trading sessions versus 10. So looking at the whole month back to looking at a whole month for the rotations versus 10 days because the volatility is falling and the numbers aren't changing dramatically week to week or too dramatically week to week. So we default back to our 20-day look back period. But the rotations are in fact falling. 6.5 points are now is now the normal rotation, up to 6.5 points in the S&P, almost 26 points in the NASDAQ. Remember, this was up in the 40s not too long ago. The Russell, 3.6. The Dow, 43 points is considered a single normal rotation on a 1-minute time frame. And crude oil is 41 cents is considered one normal rotation. Looking at the S&P is in a multi-distribution. It's really in a double distribution profile. 165,000 contracts traded, relatively decent volume, with 100% of the inventory short. The run up in the S&P, in my opinion, looking at the chart, not having traded it because I was traveling, looking at that chart, that was a very poor performance on the buy side. They did travel from 42.49 all the way up to the high 42.82, maybe something like that, or 81.75. Don't remember what it was. They did travel quite a ways, 30 points or so. But I tell you, the structure that was created during that trip and the volume that was generated during that trip is quite poor. So this morning, in the Convergent Trading Head channel, or Maven's channel, where I do put down my commentary about the markets, I stated that it is not the S&P. Friday's move was pretty hasty on pretty poor volume. The expectation was that it would take it back, and it mostly has already in the overnight session. It didn't yet move back to 42.49, where it originated from. That was at 7:19 Central when I posted this. Currently, the low is 42.49, 42.49. That's where the rally broke from on Friday, and we're back to that area that's almost like a scene of the crime interruption. Scene of the crime interruption return. Interruption of the auction and return. Sorry, I'm looking at way too many things to process. In any case, the indices are all down. We are trading inside of Friday's range across the board, pretty much, and we're coming into a market that's set up that way. Let's take a look at Friday. Now, Friday is actually surprising because Friday, the primary expectation is that we would chop, push towards the 50 right up here, 50, 51, and then chop, and just be stuck inside of Thursday's day range. That's what I said. I was wrong. It did push to the 50, but then it consolidated and it busted out really hard. Scenario 2 was not in play at all. Here's what we saw on Friday. This is where we are. If you look at the left side of the screen is the ES TPO chart. This here is a composite, meaning I have compressed several days of profiles together. This is a TPO time-based chart. We're looking a little bit longer at a little bit longer horizon, and then the break away from balance. I left those days. These days are individual days because they are trending. But as soon as they collapse on top of themselves, as they are doing now, I start to fold those into a composite as well. So what we've done is we've broken away and we have created a pretty good one-time framing higher lows. But look at the structure of this Friday move. There's there are a lot of singles along the way. You can see them shaded. These are singles here, the shadings. And overall, the profile doesn't seem to have balance. Even before the break, it didn't really have compression or balance to break away. So to me, this does look like a news-based event, except there isn't a specific news-based event tied to this that I could find. So to me, this is weak structure. We do have settlement at 42.81, and we are well below it. We're trading down here at 42.53, and this is likely to see a pretty strong reaction in both directions this morning. So to me, the open is likely to be somewhat volatile this morning. There's incentive for both sides to act coming into today's session. With a thin, elongated, multi-single print profile like this, it's hard to say where the turns are likely to take place. The overnight session has a very distinct low volume node at 42.67, which ties in with these single prints right here. This may be the first area of resistance if it decides to push higher. This is an area that I'm going to gauge. The other piece is, of course, the 42.49, which happens to be the current low, the 42.49. We want to see how that holds up. Does it get defended? Do we open and drive higher, in which case I'll be looking to trade pullbacks into the gap to settle. The gap to settle is 42.81, meaning I'm going to be looking to trade back into the closing gap or the internal gap back to settlement. So any indication that there is strength on the open, I'm going to look for a consolidation or a pullback to get long into the 42.81. For the most part, I'm going to be looking to be flat and observing the quality of the auction. I don't need to make any real commitments early in the day on Monday, especially with the kind of action that we have. We have a large gap, internal gap, but we are inside of the prior range. We had a big, really end of month looking rally on Friday. On what, for what reason, I'm not sure. I'm not sure what substantiates it. If the Fed had spoken and said, yeah, it's time to ease off, then I would say, yeah, that's probably structure that's going to remain in place. But the fact that the market took it back overnight, which was expected, tells me that this was a scene of the crime type of trade, and we are back at the scene of the crime at 49. So we're going to watch to see who takes control of the auction in the morning, in the early trade, and then we're going to look to see what time frame they're operating from. Are they respecting day levels? Are they respecting multi-day swing type levels? What are they respecting will tell us the kind of operator that's in here. But we still have, these kind of this run from balance that has relatively weak structure. Another view of this is this chart. I posted this again at the Convergence Trading Mavens channel. This chart shows that we did consolidate here at the 41.50-60 area, right against the 41.21, but we still have a gap right there. Still have a gap, and then we've run away with this thing on relatively weak structure. Any attempt to push lower, any break of the one-time framing to the upside is likely to precipitate in selling back 100 points from here to 41.50 for the base, the top of the base here. And then if it cannot hold the top of that balance, remember the balance from way back, this box to the left, if it cannot hold the top of this balance, which is, oops, I went too far. If it cannot hold the top of this balance right here in the 41, I think it was 41.74. So if it cannot hold that, then you're looking at 41.21 revisit. So there's some really clear, good opportunity to the downside from here from a day trading perspective. Not that I'm a bear or a bull or whatever. But to me, this market has pushed quite a ways on pretty poor structure, and there's some fundamental limitations, anticipated limitations to this rally at this point, because some say that, and again, I'm not an expert at this, I'm just repeating what the analysts say, that if you took the forward earnings of the S&P and projected them out to next year, the fair value at 18 multiple for the S&P is around 4,300 to 4,340 for next year, and we're already at 4281, 4282 on the high. So we're kind of pushing up against this limitation. Again, we can't trade off of that information. We've got to trade off a price, but it's a bit of a macro look at where the S&P's pricing is. So that's what we're looking at in terms of structure for the S&P. Here's what we have. We have a market that is pulling back. This is where that 67 comes from, or yeah, the 67 up here. The 67 area comes from. This is the dividing line. There's actually a profile up here and a second distribution down here. We do have the VWAP, mid, and overnight point of control in line with each other. I expect that there would likely be some resistance into the 42.60 or so, 42.62 area. And then again, the 42.67, I'm going to look for reactions there, look to see if I can catch a scalp, catch some order flow off sides on those trades, just looking for, 4 or 5 points, something like that. But overall, this thing could really slide its way right down into this area, right back to the big area of balance. So 42.40 is expected to be the next key support. And then below there, we could slide right into 42.35, which brings us into this region's most traded price in the area. To me, this looks like it is relatively weak, but we have to see how it opens, because this pullback could be seen as an opportunity to buy some longer term players. It's just really hard to determine that at this time. So we're going to wait to see what it looks like on the open and go with it. Relative delta this morning, as the market is sliding downwards, the relative delta is mixed. So we have a small lots holding up price, which they often do, but we see that the cumulative relative delta is going along with the large lots. So the large lots are dominating the fight. Sometimes the small lots dominate, sometimes the large lots dominate. The large lots are dominating price, and we can see that the very large and large lots have been sellers since about the European Open, and we'll see if they continue to participate from that side coming into today's session. So what's expected for today? This is crude. What's expected for today here? Let's go to the intraday chart. What are we looking for today? So I got to play the guessing game with these colors. My expectation for today is that this is likely to find some responsive buying into the 42, 60, 62 area. So the 62 right in here. Consolidate in here. And then overall, I expect this thing to fall down into the 40. So I'm looking for a test to the 40 below the 49, consolidate some more, and then finally come into balance into this 35 area, this 35 point of control. So I'm looking to the sell side as the primary play for today. Coming into the secondary scenario, the secondary scenario is an open auction that dips below, but what we're looking for in the second scenario is an impulse up, meaning a strong rotation higher, right? 14 points or better, something like that. I forget what the impulse is right now. A strong rotation higher that gets good continuation, fights in the 62 area, fights in the 67 area. Not expecting much resistance in the 67. And that brings us into the gap to settle trade to 42.81. And then from there, it is likely to finish the job from Friday, take out that high from Friday into 42.90 or so. And then above there, we have the double O. Not expecting that to be taken today. That's scenario 2. But where does it all come in? What's the clue? Is that test down, unable to push down, and it's pressing up against a coil, and it springs up. It doesn't grind up. It springs up and pushes right into that 62 area for a response, giving us an opportunity to lean on lower prices, somewhere in the high 50s, maybe even 50 itself. Lean against that for a long, and then take our scales, mitigate our risk, bank our risk, and then let it run into 67. And then the key value to be aiming for, the key target, is 42.81 from about 42.50. That's the key trade to the upside. Those are the two main ideas for today. For the rest of the week, we have tomorrow. There are a slew of numbers. I didn't go through the events for this week. For tomorrow, there are a slew of numbers. Claimant count out of Great Britain, unemployment rate out of Great Britain, the zoo number out of Germany, inflation rate out of Canada, building permits and housing starts out of the U.S., balance trade out of Japan. Wednesday, inflation rate out of Great Britain, retail sales out of the U.S. Those could be movers. FOMC minutes on Wednesday, which sometimes are big, but these are pretty stale at this point. We have a lot more information at this point with the change in the CPI. So those FOMC minutes may not be a big mover. And then we have unemployment on Wednesday out of Australia in the evening. Thursday, we have existing home sales out of the U.S., GfK consumer confidence out of Great Britain, and an inflation rate out of Japan. And on Friday, we have retail sales out of Great Britain, and that wraps up the week. Okay, so that's what we've got. Good luck. Don't forget to hit the subscribe button on the YouTube channel if you have not done so yet. Don't unsubscribe. Don't hit it again if you're subscribed. And don't forget to always like the broadcast so that other traders can find it. We're looking at the market in a holistic way so that when we take our short-term position, we have the backing of a much greater crowd. And that's the goal of the auction market theory. It's the goal of looking at volume profiles. It's the goal of looking at order flow. It's the goal of what we're doing here, what we've been doing here for the last, how long has it been? About 10 years or something of doing these videos. It's the process is always the same. You don't need to switch. You don't need to look for the next thing. You don't need to look for the next tool. It's all the same. Just look at your auction and look at how things are rotating through and what's successful and what's not, what base formations it's creating and all that. The migration of points of control, all these good things. For more details on that, you can go to convergenttrading.com, of course, for the trader development branch of what I do. And again, don't forget to hit the like button. I'll catch you tomorrow morning. Take care.